Narrative. It's one of the most potent economic forces that exists. We're going to unpack several of the most recent conflicting news articles over the next week or so. I don't have time, and I really don't want to take up more than a few minutes of your time to deep dive into every single one of these. First and foremost, it's important to note that nothing is as good or as bad as it seems, or as the media would have you believe. Let's take a look. These are all articles, believe it or not, that have been released within a couple of days of one another. And some of these are within just a couple of hours from one another. So check these out. Home prices surge. Great. Home prices slowed. Interesting. Listings jump. Sellers are worried. Home price appreciation accelerates. Why would you be worried if you're a seller? I love this one. Affordability slips again. We're going to cover more of that in a second. Home prices post a record year-over-year jump. Ready to buy? You should just wait a few weeks. Why a few weeks? Interesting. Home sales will continue to drop. Wait, didn't we just say that home prices are setting a year-over-year record? Anyway. Housing market will boom for at least another year. House prices still surging. Bubble doesn't seem likely. I really do like this one, actually. Housing supply finally improving. And we're going to talk more about that one in the next message. Housing market still strong despite affordability slipping. And there's that affordability slipping term again. Honestly, I could go on and on. Let's focus on just one headline, one that is sure to create a whole lot of noise. Let's go back to this housing affordability slips again. Housing affordability. So where does that even come from? Well, that comes from an index that NAR, the National Association of Realtors, publishes. And it measures whether or not a typical family could qualify for a mortgage loan on a typical home. And these three terms are defined by, a typical home is defined by the national median price existing single family home, which is calculated by NAR, National Association of Realtors. The typical family is defined as one earning the median family income as reported by the U.S. Bureau of the Census Bureau. The prevailing mortgage interest rate is the effective rate on loans closed on existing homes from the Federal Housing Finance Board. This index was created in 2000, and an index of 100 means that the typical family earns exactly enough money to qualify for a payment on a typical home. All right, so 100 is kind of the break even, and that's where the benchmark was set in the year 2000. Anything above that, for example, an index of 120 means that a family earns 20% more, or 120% of the income needed to qualify for a mortgage loan on a typical home. The typical home assumes a 20% down payment, and NAR is basing this on principal and interest payments only, because taxes and insurance fluctuate so wildly across the country. They're just focusing on the controllables there, the principal and interest, based on the prevailing mortgage interest rate. All right, now that we're armed with the intel and we know what makes up this Housing Affordability Index, let's actually look at the current Housing Affordability Index and see how much it's slipping and see how unaffordable homes are right now. All right, what you're looking at here is the most recently published National Association of Realtors Housing Affordability Index. If you go all the way to the right of that graph, you can see where I have outlined a column. That's the end result of the affordability index. In 2019, you can see that it was at 159.7, which means a typical family earned 159% of the income needed to purchase a home. 2020, it jumped up to 169 because of interest rates. And 2021, it dropped a little bit to 153. Rates were still low, but what happened? Appreciation began to really kind of take off during COVID. So yes, it did drop. And if I'm reporting for CNN or CNBC or Fox or whoever it is that you tune into, if I really wanted to grab your attention in 2021, I would have said housing affordability beginning to become out of reach. It's slipping. Families can afford less home now. Well, sure, all of that's true to a degree, but it's also taken out of context. If we're basing it on 2020, when interest rates were at rock bottom and prices hadn't begun to really take off, I don't know if that's a fair comparison. Let's look at 2018. Let's look at 2015. Let's look at 2008. Let's look at 2000. Let's look at those indexes and get a true comparison. But the media likes to really exploit and use the data that supports their narrative. If an index of 100, it means that a typical family earns exactly enough income to qualify for the median priced home, then everything else is gravy, right? So even though if we go down here to March, and you can see the little P next to March, so it's pending, but so far, March of 2022, Housing Affordability Index is at 124. Guys, that's still good news. That means that the median, that the typical family earning median income is earning 124% of the income needed to afford the median priced home. And then if you look over two more columns, you're going to see where they have reported the median family income. Look down there, March, I've highlighted it. Median income in March of this year, $89,381. Now look to the column to the right. That's the amount of income needed to qualify for the median priced home. 89,000 is the reported median income. 72,000, based on NAR's calculation, is all you would need to earn to afford the median priced home. Interesting, right? Amazing the difference in flavor that you can get from one news outlet to the next. Narrative. It's one of the most potent economic forces that exists. And the doom and gloom media should really, really understand. In fact, I think they do understand this. Yet they still push narratives to the extreme on both sides that creates a bit of a panic, one way or the other. There's no pendulum that just goes like this with the doom and gloom media. The pendulum swings here, and then it swings way over here. So, moral of the story is housing is still affordable based on this Housing Affordability Index. Yes, rates have risen, and yes, home prices have risen, but so have incomes. Just remember, the next time you hear something on TV, the next time something hits your inbox, the next time you're browsing and you see something about this crash or this market cooling or rates are skyrocketing, payments are up 53% compared to this time last year. Just remember, nothing is as good or as bad as it seems.